Hello, everyone. This is Brian Overby with Options Play. I am the Senior Options Strategist with Options Play, and I'll be your host today, filling in for Tony Zhang. So before we get started, I always have to let you know that we're going to be showing some actual securities today. That's not meant to be recommendations. If you are going to trade options, you do need to receive a copy of the characteristics and risks of standardized options. That's available all throughout the Firstrade site. Okay, so we obviously have a lot going on in the markets, and what Tony has done is added a Middle East de-escalation tracker. So this gets put out every morning inside, if you are a member of the Options Play platform, you do get access to this. And what we're trying to surmise is, day in and day out, where do we feel the markets are at, and if you should be taking on long positions. Today we were upgraded to a yellow status. Yesterday, obviously, we were hanging around the red status, but not for long because the markets made a strong comeback. Oil ran up to as high as $120 a barrel, hung out at about 110, and then there was a lot of news out about the administration trying to bring oil prices lower. Once that got a little bit resolved, we realized how important the Straits of Hormuz are to the overall global marketplace. And the markets came back strong in a very strong way, heading into the close almost flat at the end of the day. So today we actually have a yellow status saying that if you are looking into positions, we want to leg into the positions, if you will. We're going to take on smaller positions overall, so trepidatiously getting into your positions, and the risk could flip back. Now, a big thing is whatever happens, we saw what happened when it was thought that the Straits of Hormuz were closed and that the oil tankers weren't going to be able to get out to the rest of the world. So that is always a risk, and that is part of the reason why we are in a yellow situation as far as the de-escalation tracker is inside the Options Play platform. Now, a couple of things that I have personally done, and I actually did put a trade on in the VIX index yesterday, but we saw the VIX run up to 30 on the open, the actual VIX, the actual spot, the VIX index, and then it declined as the market came back, but the VIX is still elevated relative to where it's been at, which obviously makes a lot of sense. We're in a period of war, and what you're seeing here is the VIX right now trading at 25.58. But if we go all the way out to the April contract, and if you are looking at VIX indexes, which is one of the trades that I wouldn't mind doing, like I said, I put this position on in my own account, is just a long put spread in the VIX. I actually did it via using a butterfly, which we've talked about before on the show when I filled in for Tony. But the April, you just want to make sure that you're always trading in the monthly contracts. So the April 15th contract is the monthly contract. It goes out 36 days, and the market in the futures contract on the April 15th expiration is trading at about 23.5 right now. So it was at 25 yesterday. It's came down a little bit. We got the actual spot VIX index trading at around 25. So that is one spot where you could get some exposure and actually have some protection on your account. So if the market does go up, the VIX index is a contrarian index, and so when the market goes down, the VIX actually goes up, and when the market goes up, the VIX index obviously goes down, and hence the reason why they call it the fear index. So inside Tony's research, the report is changing. There's a lot of things that are changing, but we do have a report from last week that we put together. One second, let me get out of this. and wanted to cover some of the stocks and some of the changes inside that report. But there is a new equity research report that Tony's been working on that he's going to talk a little bit more about next week. I think this is part of the reason why I'm covering for Tony is the amount of work that he's trying to do to shore up everybody that is a member at Options Play to make them more knowledgeable about the markets and reports on that are covering things that are going along with the war in Iran. All right, so some of the stocks that broke out last week, some of the market outperformers, we had XLE actually was one of the strongest, which is the energy sector. The RSP is the equal weighted S&P 500 index, and the SPY is the good old SPX index. Strong stocks, one of the stocks that outperformed last week was OMC, and the stock that I think I like the most inside of the stocks that have broken out, especially in this environment, is Netflix. Netflix, and we'll take a quick peek at that chart in Netflix, but ever since the deal broke down with Warner Brothers, there's really nothing that's hindering the stock, and as far as the geopolitical concerns, Netflix has very small exposure to the general marketplace that is going on. You know, obviously, if anything ever happens to the economy as a whole, Netflix is obviously going to come down with the rest of the market. But we don't have exposure to a lot of the geopolitical concerns. So my pick of the week, if you will, would be to buy Netflix. It's a fairly inexpensive stock. And then we also have AppLovin that had a breakout this week, and that symbol is APP. And that was a strong outperformer. Some of the stocks that came off of the list, obviously, are anything that's in the airlines. The increase in gas prices right now, we actually see oil's not doing bad this morning. Oil right now is trading at about $90 a barrel, depending on if you're looking at the WTI or what your futures contract that you're looking at. So we're staying pretty steady after the drawback from yesterday, but still a lot of questions and concerns in that area, and that is definitely affecting airline stocks and across the board. Just first of all, with travel, obviously nobody's going to be traveling to the Middle East at this point in time, and then you go along with the fact that you are having a huge surge in jet fuel prices. So Netflix. Let me take a quick peek at Netflix. I'm going to pull that underlying up, and I'm going to actually run. Instead of looking at it inside here, I'm going to actually run to the platform, and I'm going to pull it up there. 1 second. Maybe I'm not. So let's pull it up inside the research report. So here's what we see in Netflix, and let me zoom in on it since I did have the app open up, but I guess I closed it. So at this point in time, what we saw, this is where people were starting to get a little positive on Netflix in the fact that they didn't think the deal was going to go through, where Netflix was going to have the opportunity to buy Warner Brothers. And so we had a strong move up, and then we had a real strong move up, a gap up from about the 83 range all the way up to about the 92 range. And then when we hit right here, right at that 100 level, we got a little bit of a slowdown, but I don't see any reason why the stock can't start trading higher all the way back up to the 120 level, or basically where the downturn started to happen when it was perceived that they were going to be in a bidding war for Warner Brothers. So that range is all the way up to about the 120 level, and I do think that is, if I had one stock that I don't mind getting bullish on in the marketplace, I think Netflix would be that stock. Here's the chart and the little comments that Tony had inside his research report. Netflix looking to break out above its $95 resistance level, providing an attractive risk reward for a bullish exposure towards the 120 upside target. And that is so basically we're just going to say that it's going to go back to where it was. Now, the only other thing about Netflix that I do kind of worry about and the exposure of it is they still have the cash in their hand, and I think they're going to start to use some of that cash. They got a very strong management team, and so if they're looking to spend some of it, like they were with Warner Brothers and all the cash that they put up, I do think that there may be a deal in the future, and who knows how that could react to the underlying stock. But right now, at this point in time in the life cycle of Netflix, I do think that it's one of the stronger stocks in the marketplace. All right, if you have any questions, please do feel free to put them inside the Q&A box. If not, let's go back and look at OMC a little bit here. 1 second. I gotta zoom in a little bit so that I can control the mouse here. Let's just escape. There we go. AppLovin here. Well, here's AppLovin. Now, AppLovin to me is a very expensive stock, and when you have markets like this, I don't mind that AppLovin had a strong move to the upside. But when we're looking at stocks that are trading at extremely high PEs, you do always worry about the downturn in the marketplace. Those are usually the stocks that have a tendency to get beaten up. But with that said, AppLovin had a really strong week coming into the beginning of the week this week. Looking forward to the breakout to the 450 level on the upside, and attractive risk reward for bullish exposure. We actually received an alert on a bullish trend following signal inside the options play platform. It's all about AI, obviously, with AppLovin. Record high margins overall, always done very good on the net margin situation. So you can kind of make an argument for the valuation, but out of the two, I'd actually like the Netflix better, without a doubt. And then Omnicom. Let's get to that. All right, so in OMC, here's what we got going on. Real strong breakout above its 85 resistance level, providing an attractive risk reward exposure for bullish exposure up to the $100 upside target. The thesis here is that IPG merger synergies, the combined entity would manage $50 billion in media billings, creating the world's largest advertising company. So the AI-powered growth, well, the money that, let's put it this way with Omnicom, the money that was put into AI it has driven the stock forward, made the OMC an attractive underlying. Net margins are still fairly solid compared to the rest of the industry, and based off of the combined company and the forward PE, we're looking at a strong industry forward PE after the merger and acquisition happens of about 7.8 times earnings. All right, that's going to be it for me today. If we don't have any more Q&As, Tony's going to be back and he's going to talk a little bit more about what's going on with the research and the reports. Every day we're going to be putting out the Iran tracker. That is going to continue to happen as long as we need to. Let's put it that way. So that's going to be part of the research report that's going to be going forward. And Tony will be back next week. So without any questions, I do see a cube that popped up here. Oh, thank you, Anonymous. I appreciate that. And Tony will be back next week. So thanks for stopping in, everyone, and we'll see you next week.